Turning our attention now to the ASX, here's Matt Birney and Bulls and Bears with the latest public company views and interviews.
Welcome to Bulls and Bears, brought to you today by magnetite iron ore developer Macarthur Minerals, ASX code MIO. I'm Matt Birney and I'm joined now by the CEO of Macarthur Minerals, Andrew Bruton. Hi Andrew.
Hi Matt.
Well, with world reserves of the higher grade hematite style of iron ore depleting rapidly, the market appears to be turning its attention to the lower grade magnetite iron ore style, with big players like Gina Rinehart and even Mineral Resources' Chris Ellison amongst a chorus of significant names that have recently either talked up or even invested in magnetite iron ore. One company that has plenty of magnetite on its hands is ASX-listed Macarthur Minerals, owner of the Lake Giles iron ore project near Menzies in WA. Okay, Andrew, just very quickly, why is it that magnetite has generally been considered the poor cousin to hematite iron ore? And, importantly, why do you think that sentiment is starting to change?
I think it's been misunderstood because it's got a lower in situ iron content when you see it in the ground, but it also has a cost to beneficiate that. But with the higher iron ore price environment that we're seeing at the moment, there's very much a case for beneficiating that product to take it to a higher grade. And of course, it also has much better green credentials than hematite.
What's the resource and reserve at your Lake Giles project now? What grades does it show in the ground, and what grade can you get it up to with beneficiation?
We've got a 1.2 billion tonne JORC resource. We've got a 237 million tonne mineral reserve. It's grading at 28% in ground on average, but we can high grade it through magnetic separation to a plus 66% magnetite concentrate, which is higher than the standard benchmark.
All right, so you recently completed a feasibility study on Lake Giles, and I want to run through some of the key metrics just with some rapid fire questions and answers. Firstly, what will it cost you to build the project?
It's going to cost us just over 800 million Australian plus about 66 million in pre-production costs.
And how long do you expect the mine to last for?
A 25-year mine life.
What long-term iron ore price have you modelled in US dollars, and what sort of internal rate of return is the project showing?
We're basing it off a sub $100 a tonne price for the 62% to get us just over $130 US a tonne for our concentrate, and that'll generate a 13% internal rate of return.
What's the net present value of the project in today's money?
Pre-tax net present value $816 million Australian.
How much free cash do you expect the mine to spit out over its 25-year mine life?
Over the 25-year mine life, it'll be about $3.6 billion.
Now, importantly, what are you predicting the state and federal governments will pick up from the project over the life of mine in taxes and royalties?
In taxes, we're going to be paying well over $870 million in taxes and $631 million in state royalties. So that's rounding out to about $1.5 billion.
And I note you've got Glencore signed up for an offtake agreement. So well done to you, Andrew Bruton from Macarthur Minerals. Thanks for joining me on Bulls and Bears today. And remember, we're only here to give you information, not advice, which you should, of course, seek independently. I'm Matt Birney, and this is Bulls and Bears.
For more public company CEO interviews, go to the Money page on the 6PR, 2GB and 3AW websites and click the Public Companies tab.